Hi, I'm JC Xue, Portfolio Manager on the Foord Asia Ex-Japan Fund, and I'm here to provide an update for the fund's performance through the third quarter of 2022. Over the quarter, the fund declined 11%, outperforming the MSCI Asia Ex-Japan benchmark, which was down 14%. Year to date, the fund's decline of about 15% also proved resilient against the index 28% decline. Concerns regarding global central banks potentially raising rates too aggressively remained in focus. In addition, supply chain issues are unlikely to be resolved in the near term given the ongoing Russia-Ukraine conflict, exacerbating declining consumer sentiment in an environment of high inflation. Against this backdrop, stock selection was key to our performance. Positions in off-benchmark names such as South Korea e-commerce platform Coupang Inc., which was up 31%, and Singapore-listed industrial conglomerate Jardine Cycle and Carriage up 17%, helped. An overweight, high-conviction position in India consumer staple conglomerate ITC also contributed positively as it was up 18%. The fund's top detractor was China-based internet search firm Baidu, declining 23%. We remain holders of the stock given its entrenched position as the leading domestic search engine with opportunity to monetize its cloud services and autonomous driving projects in the future. Investors continue to view China as a central piece to the region's recovery. With growing domestic activity and increasing stimulative policies, the country is starting to see slight economic improvement while it continues on its quest for COVID-0. However, uncertainties on China's housing issues and underlying geopolitics current remain. Taking the above into account, we maintain an overweight to Chinese equities as valuations remain one of the most attractive globally. The regulatory headwind felt most acutely in the technology sector over the previous 18 months also look to be less of a headwind going forward. The fund's Chinese investments are concentrated in technology, consumer discretionary, and financial sectors. Investments across e-commerce, online travel agencies, gaming, and other digital services will continue to see structural growth over the next decade. The consumer discretionary sector is the fund's largest sector exposure. The fund's investments in this sector are poised to benefit as Asia's middle-class consumers are set to account for 70% of the world's total in less than a decade. Lastly, with a high cash position, we continue to search for attractive opportunities, which we expect to arise from what is likely to be continued volatility and dislocation in Asian equity markets.